All right, aloha and welcome to the Growthcast, another Aloha Friday drip. This is Tyler Deveraux with my man, Jackson Campbell.
It's me. I'm here. I'm excited to be here. We haven't recorded in a while, so I'm actually pumped.
I know, dude. I'm pumped. Man. So let's knock this out, dude.
Yeah.
Let's get in. First off, want to mention Peak Partnership.
Yep.
Peak Partnership coming up. If you have not signed up for Peak Partnership, that is our networking event. Actually, that was the last drip that we talked a lot about networking.
Yep. Yeah.
Get signed up for that, man. Huge impact. Events like that have had a huge impact on my life, my business for sure, but it's great relationships. So make sure that you get signed up for that. Or if you have any questions, hit it up. Also, just want to show some gratitude to y'all. Show some love to y'all. Thank you for tuning in to the Growthcast every single day and every Friday for the Aloha drips and every Saturday for the extended cuts. Y'all are the best, man, and we love the reviews. We love the comments that you send. We love it. So
yeah, and we're very appreciative of it. And we know that you're doing it because we can see on our end with our stats and the statisticals that we have, we can see that you are sharing it and that more people are tuning in. So it's very grateful for that for sure.
Yeah, awesome. Also want to give a shout out to Rowan, who was on the podcast, because I never gave a shout out. I loved you guys. That was a great episode.
Thanks, dude.
Yeah,
we haven't even talked about it.
No.
She's awesome, man. She's very special, very wise, very wise. I love having her
Rowan,
on.
you wise old soul.
I know. No, definitely want to get her back on.
What are we talking about today?
Today we want to talk about what's going on in the multifamily not the multifamily mindset market, but the multifamily market. What's going on in that sect of the real estate market. But before we dive into that, let's do our Aloha value, or our Hawaiian value rather, before we dive into the episode. If you're new to the Aloha Friday episodes, usually we'll do a Hawaiian value at the end of the episodes, but we wanted to switch it up and do it at the beginning of this episode before we dive in.
Even if you're not new, maybe you don't stay till the end. We don't know. Don't tell us. Okay.
No, we don't want to know.
Internal review here. Of course you do, because our content's freaking legit.
Yeah.
All right, the Aloha Value. This is one that I shared with the in our Maui meeting. Every first Wednesday of the month, we have a Maui meeting where I jump on with all the team members within the company at the Multifamily Mindset. And the one that I shared was Ho'omau. And Ho'omau means, it's endurance, it's resilience, it's perseverance, it's steadiness. Ho'o means to be or to do. And then mau means always, constant, steady. And the example that I gave was that of the ohia tree. And the ohia tree is, you can learn a lot of lessons there.
Yeah.
We talked about how Pele, who is the goddess of lava and fire, when she erupts and she destroys anything in her path, including the ohia tree. The tree burns slowly. The red flowers turn into like balls of fire, and kills off the ohia tree. Now, that sounds sad, and it is sad to see those go. But if you live out here, or if you know much about those, or if you've studied those, you know that they don't really ever die. They come back again.
Very resilient.
Unparalleled.
Yeah.
Their resiliency is unparalleled. It doesn't matter the terrain or anything, man. It can be salty and sandy or cold and wet or windy, and it could be lava fields. Like it was one of the first plants to grow in a lava field. It'll always rise again, rising, blooming, growing, no matter what the outside circumstance is, which is a powerful life lesson, no matter what the outside circumstance is, we always need to be learning, growing, adapting, and not just coming back, but coming back stronger.
Yep.
Because the ohia tree, not only does it grow again, but it actually grows back stronger from the challenges. The leaves and the trunks and the branches, even the blossoms, all like adapt to survive the outside conditions. And when I was studying this, I thought it was cool. So like, if there's toxic gas in the air, the leaves will adapt and it will close. The leaves will close. If there's, the roots are trying to grow and there's, let's say lava tubes underneath, well, they'll just keep searching until it finds ground to dig its roots into. If there's strong wind, the trunk gets thicker and the leaves adapt. And no matter what the external problem is, the ohia creates a solution. And
so many lessons to be learned there.
Tons of lessons.
So many lessons. Can I add something?
Please.
I had a conversation with somebody that I love dearly that works in multifamily. in the multifamily industry. It kind of ties into exactly what we're going to be talking about today. So it's kind of working perfect, actually. So I was having this conversation with somebody love dearly, somebody very close to me that's been grinding, working their ass off trying to get a deal.
Yeah.
Trying to get a multifamily deal, trying to close, trying to get an LOI accepted. And this individual has just been struggling. But what I adore and love about this person so much is that they haven't stopped. They haven't stopped working. They've been trying to get a deal for over a year at this point.
Yeah.
And they are continuing to grind, continuing to keep those roots going down into the ground, past all the struggles, to really so they can set their foundation in the business that they're trying to build. So it's a perfect example, especially for people that listen to this podcast. Yeah. This is the Growthcast. If you're growing, it's going to be hard.
Yeah.
There's going to be challenges. But like what's the name of the tree? Sorry, I don't want to mess it. The ohia tree. But like the ohia tree, we keep pressing through.
Keep rolling, man. And
yeah.
I know that individual you're talking about.
Yeah.
And he'll never give up.
No.
He's just not.
No.
And what I hope that individual does is take a second to look at how far they've come in that year. Because it is gigantic.
Enormous, dude.
It's enormous growth.
Yeah, yeah.
And listen, when you take a second to look back and realize the problems that you've solved and you've grown and become stronger, all of a sudden you begin to appreciate challenges. Mm-hmm. You appreciate challenges because those aren't life. Challenges are, pains, losses, challenges. Those are events in life. They're not life itself. And as you look at those and you understand those are for growth, well, now you begin to welcome them.
Yep.
We had a challenge recently.
We did.
We have our whole content team who rolled.
Yeah.
And there's lots of lessons learned there. Lots of lessons.
Yeah.
But I want everybody listening to this to watch this and watch what happens. Because I'm a resilient mother. I'll tell you that right now.
Yeah.
And I know for a fact of course, it's a challenge. It's a challenge. It was a setback. But I want you to watch what happens. I want you to watch how not only do we bounce back, but I want you to watch how we actually get stronger, better.
Yep.
I want you to really take a mental note of it. See where our social media is at. See how things are looking, and then watch what happens. How do I know that? Because I'm committed to make sure that happens. Jackson is committed. Other team members on the team are committed to make that happen. And I told even the company this yesterday. And I told, we've talked about it, where it's crazy because in the moment when all that's right in front of you, it's like it seems daunting, it seems overwhelming. But then you sit back and you focus on solutions, which is really literally what the ohia tree does, by the way. It creates solutions to whatever the problem is.
Yeah, that's a good point.
And then all of a sudden you get like this clarity and this focus and this drive where it's like, I felt more clarity, focus, drive, determination, and just like energy and excitement over the past week and a half, whatever, than I have in a while, man. It's like, it's crazy how that happens.
It's because you're focusing on the solutions and not the problem, right?
I'm finding and we're finding it, not me. This is not singular.
Right.
This is plural. This is a team effort.
For sure. And it comes back to that principle that Dallas is always dripping in his drips is life's happening for you, not to you.
Yep.
All these things that are happening, right? The experience that we shared with this individual that we know, those things are happening to him.
Yep.
Or for him, not to him.
Yeah,
Sorry.
yeah.
They're happening for him to make him stronger, to make these things happen to this tree to make them stronger.
Yep.
So it's definitely a good learning lesson from a silly old tree.
From a silly old tree. All right, let's dive in.
Let's dive in, dude. Okay, so tell me what's going on in the multifamily market?
Whew, a lot, man.
Yeah.
Super strong demand for apartments right now. I mean, we're talking nationwide. If you were to, but nationwide, and we can get into why that's the case.
Yeah.
But I would say most notably, there's this huge demand in the Sun Belt. Like the Sun Belt has seen, which just look at the southern half of the U.S., okay? That's the Sun Belt.
Yeah, the eastern southern half.
Eastern too, but even Texas, these areas.
Yeah, I got that's true.
Phoenix, those are considered Sun Belt.
Okay.
Those areas have seen, double-digit rent growth. There's migration trends that are happening to the southern half. Construction, this is a big thing. We usually look at construction because obviously as construction starts to grow and there's an oversupply, well then supply may outweigh demand, right? And construction has definitely picked up since 2020. There was a lull for obvious reasons.
Yeah.
But man, absorption rates, which is just demand versus supply, dude, it's been record levels. Like literally, like absorptions have more than kept up. Occupancy is at record highs. So it's crazy.
Yeah.
Growth and crazy demand right now.
So what does that demand mean though? Does that mean that there's fewer apartments to buy? So, yeah. What is it harder to find apartments? Help me, does it make sense to buy them in this time? Help me understand that.
Great question. First off. So the quick answer is absolutely it is harder, not necessarily to find apartments. There is a lack of supply just because there's so many people who want to buy.
Yeah.
But one of the questions is is it hard to find properties? I would say it's harder to find properties that make sense.
Gotcha.
Price-wise,
Gotcha.
return-wise, like if you're like crunching those numbers. But I feel like it's a perfect storm. Like here's why it's a perfect storm. There's a shortage of apartments, affordable housing. Literally, there's an affordable housing crisis. And there's a shortage of apartments. But there's also a lot of capital that needs to be placed. Like the U.S. money supply is up 28% from pre-pandemic levels. Bro, that's crazy. Like all that means that investors have a ton of cash that they need to put to work. So what happens is that has led to like these larger, bigger multifamily properties that we acquire. Those prices are being bid up, right? Because and once again, what does that mean? That means people are willing to overpay. Why are they willing to overpay? Well, and especially in growth markets in the southern part of the U.S., well, because man, they need to put their money to work. Does that make sense?
Yeah, definitely.
So yes, it's harder to find them. One of the questions was, does it make sense to buy? And we can talk through that. But
that's awesome. That's awesome. So what you're saying is it may be harder to find good deals, but once you find the good deals, it's going to be easy to fund because there's so much money there's so much money out there.
Look at that perspective that you just threw in there.
Look at
you homo mountain. You homo mountain son of a bitch. So that's exactly what it is though, man.
Okay.
Like you anything is perspective.
Yeah.
There's a lot of capital that literally needs to be placed.
Yeah.
More now than ever, like I realize how valuable we are to our investors. Because our investors are like literally chomping and clamoring to put their money to work.
Yep.
But you have to find a deal that makes sense, right?
Yeah, definitely. Before we move on here, I want to kind of ask a question along these lines. Okay. Why are investors trying to put their money to work in apartment buildings?
A lot of reasons. You look at, I mentioned that the U.S. money supply is up 28%. What that means, money supply just measures the amount of currency and liquid assets available.
Okay.
So let's talk about this first, because the question is, why are they looking at multifamily? Let's talk about the money supply first,
okay.
and I'll dive into it.
Okay, perfect.
Money supply, that was fueled a ton by the stimulus, money from the Fed, a ton. That boosted things a lot. But it's also a sign, 28%, it's just like unprecedented levels of growth there, of that money supply. So that's a sign of a lot of economic demand that's just been building up. Right?
Okay.
It's just been like, I look at it almost like a king toes. It's been building up, and all of a sudden, now it needs to be let loose.
Yeah.
And that ultimately leads to inflation, And okay, so now with inflation and with all this money demand, why does that help the multifamily space, or why is a lot of that funneling to multifamily assets? For a number of reasons. Number one, there's lots of people seeking alternative investment opportunities, and multifamily properties that's just like was one of the best alternative investment opportunities out there.
Yeah.
Also, you look at the stock market. Do you look at the stock market much?
No, I don't.
It was sort of volatile, man, over the last couple of years. Big ups, big downs. There's been, it's been hit recently for sure, which just makes people antsy, and people don't like volatile. People don't like big ups and downs. Some people do. I shouldn't say that. Some people do like big ups and downs, but it just feels like you can't control it, right? It's like going to the damn casino. Even though I have systems at a casino that I win every single time, but that's another thing, okay? Brittany, I swear I have systems.
Another story.
Also, just to hedge against inflation, going back into the inflation side, like inflation is, you'll hear us say that apartments are inflation proof or a hedge against inflation. And it depends on what that means. Like if inflation is happening for the right reasons, meaning economic growth, jobs, those kind of things, well, then our apartments keep up with that. Because if you think about this, our apartments, the values of those are determined by the rents.
Right.
So as inflation goes up, rents go up, and it's a hedge against inflation. That's why we say that.
Yeah.
And then there's also huge tax benefits as well.
Yeah.
The last thing that I'll say is just, man, multifamily fundamentals are super, super strong. And do people see that? Like, these properties performed super well during the pandemic. People like holding their breath, like wondering, would they perform well? Well, yeah, man, a lot of that stimulus money went to multifamily owners.
Yep.
There's also a huge shortage of affordable housing. I mentioned that earlier. Vacancy rates are the lowest that they've been in 30 years. So, dude, investors want a piece of that, I guess. Like, that's the biggest, those are the biggest bullet points that I could point out, I feel like.
So how do you feel about it? I know that you're getting ready to sell a property.
Yep.
Are you buying as well? Are you looking to buy more properties?
Absolutely.
Okay.
No question, man. I definitely believe that we have a few years of strong growth left, especially in bigger apartments. So no question we're buying. But first, I'll tell you why we're selling. Because people would be like, okay, so if you still have some years of growth left, like, why are you selling apartments? Like, how does this work? Well, you always have a business plan. And I get this question at the class all the time. I tell them that, the average hold time is 3 to 5 years. It's very common. They're like, well, what happens if you want to sell it earlier? Or what happens if you want to hold it longer? And my answer is, well, that's your job. Our job as operators is to monitor risk return levels within the market all the time and determine, does it make sense to hold longer or sell quicker or keep in line with your business plan? Like, those people who get in trouble are those who don't pivot with the market,
right,
who just set something up front and then just coast through. You have to be able to monitor, that throughout. So why are we selling? Dude, cap rates have compressed in some markets to like 2%. That's so low. And we own large multifamily value add apartments, right, in great markets. Those are value add properties as a whole are in demand as well right now, for sure. Those properties in the markets that we're at, average cap rates are like 3 to 5%. That's what they're trading at. And to compare that, we picked them up for a higher cap rate, which means this: higher cap rate, lower purchase price. Lower the cap rate, the higher the purchase price.
Okay.
So in an ideal world, right, you want to buy at a high cap rate and then sell at a low cap rate. Well, that's what we've done.
That's exactly what you're doing.
That's what we're doing. That's what we're doing. Now, we don't ever base our estimations based off of cap rates going down. This is key too. We always base our projections on cap rates rising because that's safe. That's conservative.
Sure. Yeah.
So this is a key for you passive investors out there. If you're looking at a passive investment opportunity and you see what the cap rate is that they're buying it at, and then you look at what they're projecting to sell it at, if that's a lower cap rate than they're buying it at, unless that cap rate is very high at acquisition, I would be very, very cautious about that investment.
It's definitely a number you should look at.
Yep.
For sure.
Yep. So what happens? We buy at these higher cap rates. We've driven values up through rents and other strategies like building up occupancy and these kind of things. And now cap rates have compressed, so which means we've shifted strategies. So instead of holding longer, we sell quicker. That allows us to maximize returns to investors on those assets. So then second, does that make sense?
Yeah, totally. Yeah.
Then secondly, why are we buying? And oddly enough, we're buying for the same reason. Like, we get a cash out, make awesome returns to our investors, get them awesome returns, and then move those, their money, our money, because we have money in there too, over to higher yield properties and ride the wave again with our investors. So it's the best of both worlds. Because if you think about this, okay, we've bought at a high cap rate, sold at a low cap rate. Okay, now we sell, we move that over into another market, another area, another asset class. Well, always multifamily, but types of multifamily assets that have a higher yield. That just means returns that we're able to now buy at a higher cap rate again. And once again, we never project that cap rates are going to lower. In fact, I think cap rates will increase.
Yeah,
I do. Which means as they increase, well then, because they're going to increase with interest rates, and interest rates will increase, which means cap rates will increase. So it's how you buy though, right?
Yeah.
It's how you buy. So I don't know if that makes sense. It's how you
totally.
buy. So now we're able to buy at higher cap rates again.
Yeah.
Then we force that appreciation as hopefully cap rates then dip again.
Yeah.
And then we've just done it again. Anyway.
So as you go to buy these new properties with the market changing, the market always, does your business plan change per property?
Yeah, great question. So yes, so look at the market right now with rents. Maybe I'll get into this, but first off, our focus has always been operational inefficiencies first. Always been. We certainly, couple that with rent growth. We look at rent growth as an upside, but we always look at operational inefficiencies first. So that being said, rents grew, man, well into the double digits on average, national average in 2021. Jeez. So the demand is still very high, for sure, but that growth will cool down. It's already started to cool down. It's funny to look at reports, by the way. If you go look at reports right now, they'll say like, man, rent growth was so high the first, 3 quarters of the year, and then rent growth started to slow during the last quarter. That's how it happens every year.
Yeah.
Because it's a very cyclical business, a seasonal business where the biggest amount of demand, meaning people moving in and out, happens in the spring, summertime, and then it cools down in the fall and the winter. So it's like,
it makes so much sense.
It's just what
it's
happens.
just logical
so
too.
Now there was huge rent growth, so it may cool down from that. But man, nationally, most like I look at these national reports all the time. I know you know that.
Yeah.
And they still predict rent growth to be in the 6 to 7% nationally. That's still that's great, man. So to answer your question, yes, we expect our business plan to change slightly, but not a ton. We expect our business plan to change because one of the things I already told you is that your business plan should always be changing. Like we build in these buffers within our projections to be conservative. Real estate's a risk. Our job is to mitigate that risk. One of the ways to mitigate that risk is to be conservative with your projections and have other options. And to know and not only know, but be willing to pivot when it comes time to pivot.
Exactly, dude. That you took the words out of my mouth. Is you want to project, you want to set expectations for your investors. You want to overpromise or underpromise, overdeliver.
That's it.
And that's exactly what you're talking about.
That's exactly what
you want to overpromise or underpromise, overdeliver every single time, and that's exactly what it is that you're going over. So that's awesome. Anything you want to add there?
Yeah, you look at ways that you can increase the NOI and the bottom line past just rent gains. So many people newer operators and even seasoned operators will just look at rents, or they'll just look at what's happening in the market, and they don't get strategic. So what we're going to do is we're going to target assets that certainly we project there to be some rent growth there, but we're also going to target assets that have other ways for us to increase the NOI as well.
Makes sense. So Ty, if you're a new investor trying to get in right now, is there opportunities for we have a lot of new listeners, a lot of new multifamily operators that listen to this podcast. If you're new, if you were new right now, are those opportunities available for somebody that's new?
Yes. First off, you look at Ho'o Mao, man. You Ho'o Mao, you continue to grind and you find solutions. You find opportunities. And I'll point some of those out for you right now, but absolutely there is. There's always, one thing that I love about the multifamily space first is that there's always reasons that people are buying, or buying and selling. Like selling right now is an example.
Yeah.
Listen, the people that we're selling an $83 million portfolio that we killed it for our investors.
Yeah.
We killed it for us too, obviously, because it goes hand in hand.
Yeah.
That group that's coming in to buy that, they don't feel like they're overpaying. They're pumped about the deal that they're getting. They're pumped about that because they have a different business plan, and we've left meat on the bone, and there's opportunity. There's always opportunities, man. That's just a fact. So but here's the thing, and then I'll get into answer your question.
Yeah.
But I believe one of the biggest problems, I know for a fact, one of the biggest problems people have is their internal dialogue, which is, I don't think there's opportunities. Man, the market's yielded out. Man, there's too much competition. Man, I can't keep up with these guys. Man, I saw something on our network page the other day of somebody saying, man, I was talking to a broker and they were talking that these individuals have, that I'm going to be competing against essentially have hard earnest money day one, and it's a big amount, 6 figures, and I can't compete with that. Well, no, not with that attitude. But guess what we do? We do the same things. Hard earnest money day one, 6 figures, those kind of things to compete on deals that we are very confident that we're going to go in and get.
Right.
Well, this person is brand new. What do they need? They need sponsors.
Right.
Your sponsors are going to do the same things. So like, it's finding solutions, partnering up with people that have something that you don't have, that you can now be competitive in the market. And, okay, so I'll give you the opportunity because it's literally how Ryan and I scaled and grew.
Yeah.
I think a lot of people look at where Ryan and I are at now and what deals we do now,
and think that's how you started.
Yeah, and it's not,
no,
dude.
not at all. Not even close.
Not.
Yeah.
Like, smaller multifamily properties right now are highly overlooked. They're highly overlooked a lot of the times, but they're definitely highly overlooked right now. And once again, there's a huge amounts of capital that needs to be placed, right? So people will overpay for bigger deals because it fits their capital placement needs.
Right.
They need to place this capital. So I'm going to look for these bigger deals and will overpay. Why? Because it at least solves one problem, which is capital placement needs.
Right.
Because it's important. If it's not, then it's just sitting there stagnant. Now that can either frustrate you if you're an investor looking at this, or that will help you identify where the opportunity is, which is smaller assets, smaller properties.
What do you consider a smaller asset then?
I'd say anything under 100 units.
Okay.
And that's, an easy barrier, but maybe even 40 to 80 units. But man, I've done deals that are, my first deal was a 20, my first multifamily deal was a 20 unit.
Yeah.
But even over the last couple of years, dude, you've seen, we've done, well, dude, let me tell you.
We like one of our most recent deals was a 40-something unit
46,
deal. Yeah.
46 unit. And dude, we did smaller, Ryan and I, as we're starting, we did some smaller deals in the Carolinas. We did some smaller deals in Texas. We did some smaller deals in Ohio. We did some smaller deals in Alabama. We did smaller deals. Why? Well, because we could slide into that market with less competition, find properties that had problems for us to solve, and solve them. And what did that allow us to do? That allowed us to put ourselves in a position that we could take down these bigger deals, take them down. So anything under 100 units is what I would qualify that as. And that's also, but once again, that's also where a lot of the problems are, by the way. Okay, so here's a stat for everybody, okay?
Yeah.
Smaller multifamily properties operated by independent landlords are struggling the most right now. Think about the demand that I just talked about. Think about the growth that I've just talked about. But that property type, that smaller multifamily property that's operated by independent landlords, their on-time payments dropped to 76.5% in Q4. That's about the only asset class that dropped in on-time payments, and it's by far the most.
Yeah.
Well, so what does that show you? This is why it's so important to study the markets. But what does that show you? That shows you that their opportunity lies in these 40 or even 30 to 80 unit properties that are self-managed. Listen, that's still a decent size of property, but bigger investors like us will overlook them a lot.
Uh-huh.
A lot.
Right.
Why have we taken down some of these 46 units? Because we saw that opportunity and it really landed on our lap sometimes,
Yeah.
And then we're going to take it. But if it wouldn't have landed on our lap, it's just not something that we target. But now you think about this, okay? That provides a great opportunity to newer investors in a competitive market to grab a couple 40-unit properties and team them together.
Yeah. You answered the question that I had in my mind before I could even spit it out.
Which was
what? How do people benefit from getting? What are some benefits rather of getting these smaller properties out of the gate for a new investor?
So competition first.
Yep.
Your competition will be lower competition.
Uh-huh.
It just is. Like, once again, and it's always focusing on, it's always focusing on your strengths. I say, like, somebody that's brand new coming to compete with us on a bigger deal, we're obviously going to have an upper hand. But we beat out bigger operators. We beat out Blackstone by focusing on what we had. But how did we get there to even have things to have? We took down some smaller deals, man. So less competition. It's also, an easier barrier to entry.
Yeah.
So, and I'll give you cons too of these smaller ones.
Yeah, go ahead.
But an easier barrier to entry. What I mean by that is less that you have to raise. Mm-hmm. Less units that you have to go walk through and inspect and do due diligence on and all that kind of stuff. The loan amounts are lower. You don't have to have a sponsor that has so much liquidity and so much earnest money. Those are some benefits for newer investors.
Very huge.
The downside is how you operate a deal like that. One of the reasons that we overlook deals that are smaller in that size is because we want on-site employees.
Right.
On-site employees allow you to provide just more value to tenants. If they have a maintenance request, there's somebody on site to take care of it. somebody wants to come tour the property. Well, there's a manager on site to help them out with whatever they need. Whether
Right.
that's somebody who wants to tour a property or one of the tenants that needs something right then. Well, we have somebody there. 40 unit properties, 60, these smaller properties, they don't have on-site employees. They're not big enough to justify on-site employees. They have a property management company that oversees it. But when I say we pair them together, okay, well, what if we have a 40 unit and a 60 unit? Well, now you can justify. Those are two separate purchases. Those are two separate businesses, if you will. But the employees are spread across both businesses,
Right.
which means actually your payroll costs go down for both properties. So that's another upside. As you take your payroll costs down for both properties, where does your income go? Up,
Yeah,
dude.
yeah,
So-
yeah. It's funny you were talking about cons and you made a con a positive. Do you realize you did that?
Yeah, well, that's where we focus on solutions, damn it.
I love it. I love it. Anything else you want to add concerning smaller deals on why someone would want to do that first?
And listen, man, you maybe you're able to partner up with somebody and take down a bigger deal. Do that too.
Yeah.
But the key, more than anything, you asked me, is there opportunities out there? And yes, for a newer investor. And no question, dude, no question. So go look for some of those. Go target some of those. Don't be afraid to don't turn something like that down. Like look for those.
Yeah.
Okay. The other side is to be very strategic with what you want to buy.
Yeah.
Let me give you another opportunity. We weren't planning on selling initially our portfolio.
No.
We weren't planning on selling Signal Hill that we just exited either, or a couple of them that we've exited. But do you know how that's happened? An investor, and I tell our individuals in our network to do this all the time. Whether they do it or not, I don't know.
They should be doing it.
They should, and a lot, those who are doing deals, they probably are.
Yeah.
Lee Ford is an example. Lee, if you're listening to this, he's killing it, man.
Crushing it.
I just invested passively into one of Lee's deals as well. He's killing it. Because I invest passively in all of our deals, but I invest passively in other deals too.
Yeah, got to.
Well, what Lee did is he did exactly what I talked about, which is you grab these properties that are not listed by a broker, they're off-market properties, they're not for sale, and you take those to a broker and you're like, hey, I'm interested in buying these. This is what, if you can get one of these under contract, I'm a buyer. I want to buy this. And so now what happens is, and this is what happened with us in the portfolio. Somebody comes to us and they're like, hey, I have somebody who wants to buy your portfolio. Get out of here. All of our Columbia properties, Columbia, South Carolina, it's too much. No, it's ridiculous.
Yeah.
No, they're very interested. They are very interested. Well, okay. We have some prepayment penalties that we would have to pay. Like, dude, it doesn't make sense. For us to be able to it doesn't make sense. Well, I would just run the numbers. Throw out a number. You throw out whatever number. Well, so what we did, we run the numbers. We throw out an asinine number.
Big number.
We thought asinine, right?
Yeah.
And they immediately, boom. Why? Because it makes sense to their business plan and what they're doing.
Right.
Well, it also makes sense to our business plan, and our investors are also makes sense to them too. They're very happy about that.
They are.
So it's a win-win. It doesn't have to be a zero-sum game.
Right.
It doesn't have to be a loser for somebody else to win. Both can win. And that's a fact.
And that's huge in real estate.
Yeah.
Even the deal you got, like when you guys bought the deal, it was a win for the seller at that
Yes.
time too.
Yep.
You know what I mean? So it's like that's one of the things I love about real estate. Is
So do
there's
I.
so many opportunities for so many people to make money.
Yep.
Just by buying and selling these properties back and forth to each other. It's awesome.
But the key, Jay, is focus on solutions.
Yeah.
So to anybody that's out there that is listening, I want you to really take note of your internal dialogue. How often are you having negative internal dialogue? For example, I'm at the gym today and I walk in and the guy at the front desk is a stud. Always calls me by name, always. And he says, Tyler, how you doing, man? And I was like, not too bad, dude, not too bad. And then I walked away and I was like, not too bad? Well, bad is still a negative word. Why wouldn't I just say, I'm fucking doing great, my man? Is it because it's a great morning?
Yeah.
Doing great. Why not I just say that? But I catch myself in error-ridden thinking.
Right.
And that's what I would challenge you to do. To really focus on your internal dialogue and that's external dialogue, but even internal. And how often is that leading towards negative? Even if you're not too bad is really you're trying to be positive, but you're being negative.
Yeah.
So check into that. Catch yourself in error-ridden thinking, and then turn, and just like the ohia tree, tying this back in full circle at the end, just like the ohia tree, man, just creating solutions for whatever external environment is out there. And if you do that, you'll look back a couple of years from now after this growth, because there is growth right now happening. That is a fact. And you'll be in a completely different position. Just like, man, when I first started, people have been telling me since I started, man, the market's about to correct. You should not, be careful. The market's about to correct. Don't get into it. You should be careful. You might lose your ass. Can you imagine if I would have listened to that?
No. Jeez.
I mean, dude. And listen, the market will correct eventually.
Yeah.
But as the market corrects, if you do the same thing that I'm telling you right now, which is focusing on solutions, you're going to find solutions to whatever problem, with whatever problem's out there, because any problem has the seed of an equivalent benefit. That's a Napoleon Hill, comment, quote. He talks about that all the time. So look for the solutions. And my friends, have a great weekend. Live always with aloha. And you know what? Next time I see you, you know what I'm going to say? I'm doing great. And I want you to say the same thing back to me, all right? Love y'all. Live always with aloha. Peace.